Fascinating conversation. Joining me now is Antoine Halff, Director of the Global Oil Markets Research Program at Columbia University and former Chief Oil Analyst at the International Energy Agency. Thank you so much for joining us. Great to have you on. Triple digits.
Right.
Do you think that that would have been one scenario that we would have to contend with?
Well, I think what the Al-Fadhi's remarks really underscored is how much the market is caught between very opposite risks. Very high supply risks with issues in the Middle East, but also very significant demand issues with concerns about the slowdown, the impact of the trade war, very bearish market indicators this week, very bearish noises from Mark Carney in England.
Yeah. So, I mean, oil and geopolitics, it seems like it's a marriage. Not a happy one, but it always, I mean, the one influences the other all the time.
It's a very belligerent relationship, yes. Right.
So this is what I find fascinating. If I look at what oil did today, Brent crude was falling off a cliff. So was WTI. And it's fascinating because, you know, at the end of the day, why did we see such a drop when this decision was taken?
Well, it's very counterintuitive in a way because OPEC really delivered at the meeting on all the elements they had on the agenda. They extended Barkindo's mandate. They delivered on the formalization of the relationship with Russia and the non-OPEC partners. And they extended the production cuts for 9 months, which was the most bullish way, in a way, outcome of the agenda. Yet, Brent collapsed and WTI fell as well.
And usually when these OPEC meetings happen, I know that there's a lot of to and fro and, you know, who's going to cut, who's going to be at the receiving end of that. But you've got OPEC and non-OPEC members. You've got Russia that was on board, which is a really big deal. We might see a little bit of weakness today, but what are prices going to do going forward?
So what I think is the market is relying on imperfect information. The signals that come from public sources are very dated, they're very lagged, and they're partial and they're not very good in quality. So one of the issues that the market is not seeing, but we're seeing through satellite observation, is that stocks are starting to fall. They rose, inventories rose dramatically after President Trump announced the lifting of the sanctions waivers back in April, end of April. So there was a huge buildup of precautionary stocks, especially in Asia. For the last 2 weeks, we've been seeing a fallback in inventories. And the fact that now Iran barrels are off the market is starting to squeeze the Asian buyers, which are the main market.
And that's interesting because when we saw what happened between the US and Iran, the oil prices were, you know, rallying quite a bit because we were worried about the choke point in the Strait of Hormuz. And then you saw Iran shipping oil to China.
Right.
Is that a wild card here that we need to focus on?
It is a wild card. So in the first round of the sanctions between November and end of April, Iran was actually remarkably successful at getting around the sanctions, shipping oil on tankers that turned off their transponders and really getting its oil to the market at a discount, but supplying the market. Now we see a shift, and Iran has been loading its oil for the last 6 weeks, but it hasn't really found a home for it. So maybe it will unleash that tsunami of oil in China, maybe not.
That'll be interesting. Very quickly, the US President Donald Trump and what he's been saying about oil prices, because he wants an oil price that is at a decent level for his producers, but he also wants cheap gasoline prices for consumers.
That's always been the case for presidents regarding of their party affiliation during an election year. When the election comes around, presidents want
So we shouldn't worry too much about that.
I think we should worry. There's always risks in the market, so it's a very risky market.
Okay, Antoine, thank you very much. Good to have you on the show.
Thanks for having me.
Thank you so very much.